Hey, over the past couple of weeks, mortgage rates have moved it a little higher. While that may sound discouraging, the reason behind it is important. The increase wasn't caused by the Federal Reserve. Instead, it was driven by the bond market, rising oil prices, ongoing concerns about inflation, and of course, geopolitical tensions have all contributed to higher Treasury yields, which generally means higher mortgage rates. The next report we'll be watching closely is the PCE Inflation Index, the Federal Reserve's preferred measure of inflation. If inflation shows signs of cooling, mortgage rates could improve. If inflation remains stubbornly high, rates may stay where they are or head north, and that 10-year might go above 5. What does this mean if you're thinking about buying? Here's the good news. People aren't putting their lives on hold because of interest rates. Families continue to grow, people change jobs, some are relocating, downsizing, upsizing, or buying their very first home. Those life events continue to drive today's housing market. We're also seeing real estate become much more local. Some areas of the country have more homes available, and buyers have greater negotiating power. Here in Southern California, inventory remains relatively limited, which continues to support home values while still creating opportunities for buyers who are prepared. The bottom line, trying to predict the perfect interest rate has become a losing strategy. Instead, focus on what you can control, understanding your financing options, talking to me, knowing exactly what you can afford, back at me, being prepared what the right home becomes available, working with professionals who can help you navigate today's market. Many buyers are discovering that waiting for rates to fall may not necessarily put them in a better position. If rates improve later, obviously refinancing may be an option. But if home prices can continue to rise while inventory remains limited, waiting could end up costing more in the long run. Every situation is different, which is why having a personalized strategy is so important. And those strategies can lead to how we create affordability. And believe it or not, we can get you into the fives and so forth. So again, it's strategy and how we put a deal together so that you don't have that higher 6.5% interest rate, get maybe something at 6% or even sub, as I mentioned. So again, it's strategies and knowing how to put a deal and an offer together. Case in point, here's a win of the week for you. This week I was helping a client purchase an investment condo when we hit an unexpected obstacle. The original lender kept requesting more documentation related to the property's balcony inspection. Every time one condition was satisfied, another one appeared. The closing was quickly headed in the wrong direction. Rather than letting the transaction fall apart, I moved the loan to another lending partner whose guidelines were better fit for this property. The result, the new lender reviewed the file, approved the loan, and issued loan documents in just 8 days, keeping the transaction on track. Why does that matter? Not every lender looks at this loan the same way. As an independent mortgage broker, I have access to multiple lending partners. If one lender becomes a poor fit for a particular transaction as you move forward and information is discovered, I often have the ability to pivot to another lender with guidelines that better match the borrower's situation. That's one of the biggest advantages of working with a mortgage broker. It's not just about getting a competitive rate. It's about having options when unexpected challenges arise. And it's real estate. It does happen. If you're thinking about buying, refinancing, or investing, let's put together a game plan that before you start the process, a little preparation can save a lot of stress later. So make it a great week. And remember, I'm here whenever you're ready.